Ladies and gentlemen, good day and welcome to the earnings conference call of GE Power India Limited with respect to its financial results for the quarter ended on 30th September 2023. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Chiranjeevi Jain, Managing Director. Thank you, and over to you, sir.
A very good evening. A warm welcome to all of you for joining the earnings call. I have my team with me today to address the financial results for the quarter, first half of the financial year 2024. I will touch upon the global economy, where the global energy sector is making significant strides towards achieving net zero by 2050, despite an actual increase in power-related emissions in 2022. As reported by IEA, emissions were 1.3% higher than the previous year, reaching 13.2 gigatons CO2 in the power sector. Moreover, with August 2023 recorded as the hottest globally, this year is expected to even exceed 2022 in terms of carbon emissions. Despite substantial advancements in clean energy technologies on a global scale, the adverse effects of climate change are becoming more frequent, severe, and disruptive. The crude oil prices, after correcting in the first half of current year, have started a good trajectory again in the face of resilient energy demand and transnational dispute. IEA estimates an average growth of 3.2% in global electricity demand in 2024-25 as the energy crisis abates. By 2025, Asia is projected to represent half of the world's total electricity consumption, marking the first time in history this region will reach such a milestone. Additionally, one-third of global electricity demand is expected to be attributed to China. Globally, the rapid advancement of electrifying transportation and heating persisted. Over 2.3 million electric cars were sold in first quarter, about 25% more than in the same period last year. IEA expects sales of 14 million units by end of 2023, representing 35% year-on-year increase, with new purchases accelerating in the second half of this year. Electric vehicles and heat pumps taking center stage globally will further accelerate the growing electricity demand. Coming to India, the energy sector faces a critical juncture. Efforts are towards deploying clean energy, yet the demand for electricity still strongly relies on traditional energy sources like coal and gas. The country's use of coal is actually on the rise, as adding renewable energy sources at scale and preparing the grid to handle their fluctuating nature does not happen overnight. At the same time, India's energy demand continues to grow. Over the initial 7 months of the financial year until October, coal production surged by 13%, reaching 500 million metric tons compared to about 448 million metric tons in the same period previous year. Further, coal dispatches have mirrored upward trajectory. Up to October 23, the cumulative coal dispatch reached 541 million metric tons, in contrast to 483 million tons during the corresponding period in FY24-23, denoting an increase of 12%. The growth in power demand in India, as outlined by IEA, was evident during the first half, with consumption growing 7.8% to about 847 billion units. Most of this growth has come from surge in demand during July-September quarter, as opposed to April-June quarter, which is usually the hotter period. Humid weather conditions and scanty rainfall in August and September led to surge in electricity demand, with peak demand touching 241 gigawatts during the quarter. The Central Electricity Authority has projected peak demand to touch 256 gigawatts in 24-25. On the back of surging demand for coal-based power, the government has extended emergency clause under the Electricity Act 2003, mandating coal-based power plants to run at full capacity in June 30, 2024. During the recent quarter, government declared it has not started developing plans to phase out older coal-based power plants after 2030. This announcement is in line with the current power scenario in India, and this resonates with the primary focus of our company's service offerings and presents substantial opportunity for growth in the coming years. How does this impact the performance for your company in first half 2024 for the Q2? I will now share a few moments around that. During the second quarter of 23-24, there has been no substantial shift in market conditions for our business. We are still seeing that FGD and hydro PSP opportunities are converting slower to orders than anticipated. For FGD, we have received a letter of intent in the second quarter for the GSECL Sika power station of 444 crores. This has converted to an order last month, and it is the only FGD order we have been able to book in the current financial year. I would also like to mention the letter of intent we received in the second quarter for manufacturing of pressure vessels in our factory in Durgapur. This is the first time we have received such a letter of intent, and when converted into an order, it will support the demand for the Durgapur factory. For the upgrades in services, we are seeing that the pipeline has started to convert into orders, especially in the DMOX segment. The orders are still small and will take a while to fulfill the gap that we have from the lower orders from SGD and needle. The segment that continues to grow quarter on quarter is core services, where we have booked 40% more orders quarter on quarter. This once again confirms that our strategy to focus on services has been the right move for your company at this time. Our revenue overall is down 17% versus Q2 of the previous year, primarily due to lower orders in the previous quarters as well as project delays. Last topic that we mentioned regarding claims, we are continuing the efforts. The procedure remains long and time consuming, and it is taking longer to convert them into money. So that's the overall summary on the operating performance of the company, and I hand over now to our CFO, Yogesh Gupta, who will take you through the financial performance of the company for this quarter. Over to you, Yogesh.
Thank you, Prashant. Good evening, everyone. I'm pleased to welcome you all to share the financial and operational performance of the company for the second quarter of FY23-24. During the quarter, the company got orders worth 671 crores against rupees 248 crores in Q2 FY22-23. GSECL Sika order of rupees 444 crores was the major highlight of this quarter 23-24. As of September 30th, 2023, we have order backlog of 3,699 crores, which represents active revenue opportunities in hydro, FGD, boilers, and service segment. Lower than expected industry demand leading to lower order inflow in the last 2 years and Sonpati project suspension has resulted into lower revenue for the quarter. Revenue for the quarter 2-24 stood at 354 crores, down from 428 crores in the corresponding quarter of the last year. And revenue in Q2-24 is also lower than the revenue of 424 crores in Q1-24. Cost escalations due to project delay and execution challenges at site and slower train conversion have led to lower margin for the quarter under discussion. Loss before tax for Q2-24 was rupees 62 crores against loss before tax for Q2-23 of rupees 113 crores. The reduced loss is primarily due to one-time provision impact of Sholapur fire incident of 78 crores, which was booked in Q2-23. Further, the decrease in loss before tax for Q2 24 as compared to the loss before tax for Q1 24 of rupees 136 crore is also due to one-time provision impact of rupees 69 crore for the Sipat fire incident. Summarizing, the focus area for the company continues to be volume increase by fresh order intake, claim settlement, and cash collections. We now open the forum for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjay Kohli from Goldstone Capital. Please go ahead.
Thank you. Good evening, and thank you for the opportunity. If you can tell us a little bit about, there's been a mention of depromoterization of the parent. And obviously, this is having a bearing on future plans, which areas this particular company is going to remain in. So, connected to this, whether the enormous opportunity in hydro will continue for our company, whether the company will continue to service GE subsidiaries which are overseas throughout Asia, whether we'll be a hub. So what is the timeline essentially for this depromoterization, and essentially what does it really mean? Will the parent retain a certain amount of stake? Because our understanding is that GE Vernova is also now getting geared up to list in the United States, and they have informed stakeholders of their intention to come out of any fresh thermal, but of course continue to service the existing thermal site. Thank you.
Thank you, Mr. Sanjay Kohli. I think you have well summarized the current situation of the company with the transition from GE to GE Vernova listing as a separate entity, and also in making their mandate clear in the areas of operations that GE Vernova would want to play. Coming to the GE Power India Limited, in GE Power India Limited depromoterization, the timeline that was announced was 36 months, and at this point in time, there is no further update regarding the same. So the current mandate, which fits within the global state of GE Vernova mandate, allows focus on services of coal-fired power plants. The second area that you mentioned about hydro,
the hydro and hydro pump storage.
Yeah, we are evaluating the opportunities.
हेलो, थोड़ा आपका आवाज थोड़ा सॉफ्ट है सर.
Yeah, so the pump hydro storage and hydro, as I mentioned earlier in the speech, is taking longer than we anticipated to convert into orders. The order that we booked last year, Saundati, is also under suspension at this point in time. So the orders are not converting as per what we anticipated into the order book. So we are watching this very closely, and we'll provide an update to you as and when we have it.
Okay, thank you.
So does that answer your question?
Investors are quite concerned about this whole situation, and pertaining to, and there's in the absence of any update, obviously there is a concern as to what will be the way forward for our company. And this is in the light of sales degrowth which has taken place. So that is the concern. But I'll come back in the queue, and if you have anything further to add to this, most welcome. But that's it from my side for the time being.
Thank you.
Sure. Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Danesh Mistry from Investor First Advisors. Please go ahead.
Hello, sir. Good evening, and thank you for taking my question. So, if you could just give us a little update on what is the receivable situation this quarter. How much have we received from on basis our milestone payments? Number one, on the receivable side from our debtors. Number two is the fact, sir, what is our net debt today, and how much do we think will be our net debt by the end of this financial year? And third question and last question, sir, is that you mentioned about the vessels being produced at Durgapur. Assuming that this LOI gets converted over a period of time, what would be the improvement in the capacity utilization at Durgapur? Because we've done a fair amount of optimization, so I reckon it would be pretty margin accretive for us. Thank you, sir.
Thank you, Mr. Danesh Mistry.
And sir, just one more question, sir. If you can just talk a little louder, because your voice is very muffled, sir. We can barely hear you, sir.
Yep, thank you. I will address the Durgapur question first, and then I will pass it over to Yogesh. On Durgapur, we have optimized the capacity in effective terms to somewhere between 220 to 300,000 hours, depending on the work rotation. This year, we have been able to reach largely from the service is about 150,000 hours this year. So there is still, but this is a significant progress from service from where we were 2 years ago. We see continued growth quarter on quarter. We do hope with this pressure vessel and the oxygen lancers as the new products that we have developed, we should add more hours. So, for example, the pressure vessels will add anywhere between 20,000 to 50 or 80,000 hours.
Got it.
Or more as we get into the market. This is the first project. We want to focus on the learning, focus on good execution, and then we will expand in that area. So that is one promising area. The second area that we are going for is the oxygen lancer, where we have roughly about 20 to 30,000 hours, and we have some more opportunities that we are working with. If we do see the conversion of these opportunities, we will see probably a ramp up to reach the existing capacity in 6 to 8 quarters from now. So there will be some underutilization till then, but we are working hard to accelerate such products which would help us to mitigate the requirement of the factory.
Got it, sir. Thank you.
So over to you, Yogesh, for the account receivable questions.
Thank you, Kushal. And thank you, Mr. Mistry, for your question. And to start with the collection, we collected almost about 400 crores in quarter ended 450 crores to 55, and about April to June quarter was about 490 crores.
Got it.
And full year we have done almost about 900 crores.
That's very good, sir. Thank you.
Thank you.
Thank you, sir.
And moving on to borrowing, our borrowing as of end September was 380 crores. And if we compare it with June borrowing, June was 473. So our borrowings have gone down by 93 crores if we compare with June. And if we compare with March, our March borrowings were 292 crores. We have gone up by 88 crores with our borrowing as of March 23. And then moving on to our how we have we are looking at the future predictions. We normally don't give any future predictions on how we are trending. And we have been focusing on the achievement of milestones. There have been some delays on account of some project challenges that we have initiated and faced, wherein the collections have been delayed. And we have been taking care of all the safety aspects to do or perform our functions and execute the projects in perfect with the safety mandates.
Got it, sir. So, sir, this borrowing you're saying is gross or net?
This is gross.
Gross. And net, sir, what would be our net borrowing as of September balance sheet, sir?
What do you mean by net or gross?
Not basically gross. So let's say we have gross of 100 rupees, and then we may have cash of 40 rupees. So our net debt would be 60 rupees, sir.
Yeah. So this is we would say our borrowings in September will be about 228 crores if you net it off with the cash that we have in escrow accounts and all the other cases.
Understood, sir. Understood. And sir, what would be our September ended receivables outstanding?
September ended receivables are 950 crores approximately.
Right.
And this is also lower than if you compare with March. It's already lower by about 40 or so.
Got it. Okay, sir. Thank you very much, sir. Thank you, sir. If I have more questions, I'll come back in. Thank you, sir.
Sure. Please.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder again, to all the participants, you may press star and 1 to ask a question. The next question is from the line of Danish Mistry from Investors First Advisors. Please go ahead. Danish, are you there?
Yes, can you hear me? Hello?
Yes, we can. You're audible.
Yes,
Go ahead.
yeah. So thank you for taking my question again. Just a couple of more questions. One is that, we've had, as you've even touched upon in your introductory remarks, we've had a couple of unfortunate incidents, fire incidents, including the one at Sipat last quarter. So any sense on when we can get the insurance claims over there, because we've already provided for all of them. But any sense when, the insurance claims and receivables would start to come in for those particular projects?
This is very difficult to predict. Our previous experience has been a year plus or almost 3 years in recovery of such claims. These are complex and they take time. So that is what I can say from the previous experiences. Okay.
Got it. And sir, if I may just take a leap out of the previous caller's question on GE Vernova. Do you have any sense on whether when we said that the promoter wanted to exit, does it mean that GE Vernova is the final owner of our company? Simply put.
So we've clarified that in our notification earlier.
That
the change from GE to GE Vernova is a global movement, which is having no bearing on the earlier announced depromoterization strategy of the company.
Okay. So basically that will continue, is the sense that is there as of today.
As of now, yes. As of today, that is what it is.
Got it. Okay. Thank you very much, sir. Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Sanjay Kohli from Goldstone Capital. Please go ahead.
This current quarter's operating numbers, we're noticing the consumption materials consumed as a percentage of revenues is in the region of 80%. Can we hope for a visibility in the coming 2 quarters that this is a more improved number? And if you can give us a sense to what extent is management targeting to reduce this?
You can come again around the question on conversion. Are you saying what conversion do you mean?
No, I'm talking about the consumption. The consumption, materials consumed as a percentage of your revenues is quite high, is very high. Still continues to be quite high, though it's reduced. There seems to have been some improvement. We've noticed an improvement from about 90% in the corresponding quarter for last year to 80%. But obviously there would be a hope to improve further. But can management give us some kind of definite visibility for the next half?
We do not predict or currently give future guidance, but what I can share with you is we have a mix in the portfolio of large duration hydro projects. The projects have been in the order book for more than 8, 10 or even more, 20 years plus. And they have a very long gestation period, and then you have suddenly a quarter of activity and then it changes. So that's one, and which has a different material cost to revenue ratio. The second aspect is the backlog from the boilers, which is again a different product. It's a product business from the factory. It has a different profitability or gross margin ratio. And the third one is the service upgrades and service cores and FGD. So since the area that is stable is the service, and that portion, however, today is currently not significant. Therefore, the majority of the turnover comes from long-run projects of either hydro or FGD, and therefore the fluctuation quarter on quarter based on the cost updates, because if in a long project, if you have a cost update in one quarter, then you will see a big variation. And then if you have a claim that materializes maybe 3 quarters later, then that kind of significantly changes the impact. Therefore, considering the project nature of the business, what we have been proposing as a strategy is to continuously focus on the growth of services where we have stability, we have clear guidance that we can provide in future. So at this point in time, that is how we are trying to manage the mix of the portfolio, and therefore it's hard to predict quarter on quarter what would be the gross margin or cost to sales ratio.
Okay, thank you.
Plus, I would like to add to the specific question on material. Prashant, here we have, when we look at quarter ending June 23, we have 69 crores of shipments, which is almost about 16% of.
The voice is very faint. If you can just
So the
flip into the handset, please.
Is it better now?
Yes, better now. Yes.
So the specific question with regard to cost of material.
Yes.
92% to 76%. In the quarter ended June 23, we had provision for the fire loss of skipper, which has been mentioned even in the regulation 33 note number 3, and we have considered this in the cost of material. And this translates to 16% of revenue. If you see versus quarter 3 September, there are no such provisions. So we are better off by 16%. It is 76%. Approximately that's what we have.
It's largely, as I said, in large projects when you have a cost update, it does impact, and that's what is driving the fluctuation.
Yeah.
Yes.
Mr. Sanjikoli, does that answer your question?
Yes. So as there's growth in services, this metric will get better and better.
As I said, today the volume of service mix is less than 30%, to be significant and appear in the balance sheet and make an impact. So it will take a while we get there. The structure cost to be recovered currently, we need volume, and that will not be fulfilled by services alone, at least for 4 to 6 quarters ahead.
And the pressure vessels opportunity, how big is this going to be?
I would say that currently we want to be focused. It's a new area we've just entered. We are evaluating the margin attractiveness. It's a first test order, and we will come back with you once we are clear on the strategy. We want to test it out. How does it go? How does it bring margin profitability? We will come back. It's a test. It's a pilot. We got into that area. It's a largely fair opportunity. I would say it's an opportunity that can support Durgapur if we play it out well. So we will come back to you with more. At this point, I would want to go ahead of where we are in the process.
Right. Right. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Prashant Chiranjeevi Jain, Managing Director, for the closing comments. Go ahead, sir.
Thank you. Thank you all for the questions, and thank you, team, for preparation and joining in the call today. Have a good evening, have a very good Diwali, and have a very good celebration in the festivity season with your near and dear ones. Have a good time ahead. Thank you so much.
Thank you so much. On behalf of GE Power India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.